It's easy to get caught up in the day-to-day noise of the stock market, right? But while all that's happening, there's a much bigger, much quieter shift going on in the global financial system. Today, we're going to dig into this silent move and talk about why it's so incredibly important for anyone thinking like a long-term investor.
And when I say big, I mean truly massive. We're talking about a move that involves trillions of dollars and the most powerful financial players on the entire planet. And yet, you're probably not hearing about it on the front page news, are you?
And see, that's what's so fascinating about this whole thing. It isn't some loud, dramatic crash or boom. Nope, it's happening quietly, away from all the hype and the noise. And honestly, that's precisely what makes it so critical for anyone who's trying to think strategically about their own long-term position.
So what's actually going on here? What's the core action? Well, it's this. The world's central banks, the institutions that manage entire national currencies and reserves, they are buying up gold. And let's be clear, this is not some fringe movement. This is a coordinated move happening at the very heart of global finance.
And look, we are not talking about some minor portfolio adjustments here. Not at all. We're talking about massive, sustained buying on a scale that screams a fundamental change in strategy. This is a deliberate, highly calculated move.
And this quote right here, it really gets to the heart of it all. Whenever money moves silently at the highest level, you should pay attention. I mean, think about that. When the smartest money in the room starts making huge moves without a big press conference, that's not noise, that's a signal. And it's a really, really powerful one.
Okay, so to really understand what that signal means, we've got to look at the two assets at the very center of this story. Because this isn't just about picking one investment over another. No, this is about choosing a whole system of value.
I mean, for most of our lives, right, the US dollar has been the undisputed king. It's the world's reserve currency. Everything from international trade to oil has been priced in dollars. Now, this system gave us a lot of stability for sure, but it also put an immense amount of power and control in one place.
So that brings us to the million-dollar question, right? If the dollar system has worked for decades, why the shift now? What's changed? Why are these massive institutions quietly inching away from something that's been the bedrock for so long?
All right, this really breaks down the fundamental difference perfectly. On one hand, you have the dollar system. Holding dollars is basically holding a promise from a government. It's an IOU, right? It depends on their policy, their stability, and you have to trust them. Gold, on the other hand, well, it's a physical hard asset. It doesn't rely on anyone's promise to be valuable. There's no counterparty you have to trust. It just is. And that's really the essential logic here, isn't it? When confidence in those promises starts to get a little shaky, maybe because of inflation or debt or rising political tensions, well, suddenly the appeal of a real, tangible asset that exists completely outside that system, it just skyrockets. Now, this trend, it's been building for a little while, but it's the acceleration we've seen recently that's really making people sit up and pay attention. That's what's revealing the true strategic thinking behind it all. So central banks have been slowly and steadily adding gold to their reserves for years. But just look at the change in pace lately. That curve has gotten way steeper. This is not business as usual, folks. This is a strategic ramp-up. And this leads to a really critical distinction we need to make. This isn't just diversification. Diversification is when you spread your risk around within the current system. What we're seeing here is repositioning, and that's about preparing for a fundamental change in the system itself. It's a much, much deeper strategic move.
And of course, this kind of repositioning doesn't just happen in a vacuum, right? It's being driven by some really powerful geopolitical and economic forces that are literally reshaping the world as we speak.
I mean, just take a look at these drivers. Any one of these is a huge deal on its own. You've got rising inflation, which just eats away at the value of your currency. You've got geopolitical tensions and conflicts all over the globe. Then there's the risk of financial sanctions. We've all seen how they can be used like a weapon to cut entire countries off from the system. When you put it all together, it all points to one thing: a powerful desire for financial sovereignty, for independence.
And this, right here, is gold's ultimate strategic advantage in the world we live in today. Gold cannot be sanctioned. It's a neutral asset. You can't freeze it with a keystroke. You can't devalue it with another country's policy decisions. It sits completely outside any single nation's control, which makes it an incredibly powerful tool if you're looking for financial independence. Okay, so we've seen what the central banks are doing, and we have a pretty good idea of why they're doing it. Now, let's bring this all home. Let's talk about the most important question: how should a strategic investor like you think about all this?
So what does this all mean for you? Well, the lesson here isn't to just run out and try to copy these trades tomorrow. That's not it at all. It's about understanding the mindset. It's about recognizing which way the biggest pools of capital in the world are flowing, and more importantly, understanding why.
You have to adopt a central banker's mindset. These people aren't day traders, right? They're strategic managers of long-term risk. They don't think in quarters, they think in decades. Their number one job is to protect value over the long haul, not chase short-term trends. It's all about understanding where the money is going and positioning yourself accordingly, not just reacting to the news.
And this quote just perfectly sums up the takeaway. The people who follow headlines react, but the people who follow money position. See, if you're just reacting to the news, you're always a step behind. But if you can understand these deep, silent flows of capital, it allows you to get positioned for what's coming, long before it ever makes the headlines. And it's something worth remembering, you know? The biggest moves are rarely the loudest ones. The really profound shifts in finance and power, they don't happen with a big press release. They happen through these quiet, consistent actions that just build and build over time until one day, the new reality is just undeniable.
So that's the real question I want to leave you with today. What are the world's biggest players preparing for? When you see the people managing the global financial system making such a deliberate, silent shift into a timeless, hard asset, you really have to ask yourself, what scenario are they positioning for? And maybe even more importantly, what does that mean for your own long-term strategy?